Hello, students. So let us begin with this class where we're going to talk of a new topic. The topic's name is past adjustments. Now, this topic is similar to what we have done in class 11, which was rectification of errors. So, what happens in this? Let us take some question and understand. And before that, let's learn the reason why we are doing such fast adjustments. Because actually, when your accounts close at the end of the year, you do not alter these accounts. So, if your accounts have closed, you made your balance sheet and you found out all your financial statements by preparing them, then it's not altered at the end of the year. Instead, what is done is we pass a single journal entry, which is not at the end of the current year, but we pass it at the beginning of the next year in order to rectify this mistake. So, this is what we are going to do in this topic of past adjustments. We're going to find out that single journal entry. Let us take the questions now. By the way, this is also called adjustment in the closed accounts. It's mentioned here, adjustments in the closed accounts. So let's see question 40. It says, after the accounts of the partnership have been drawn up and the books are closed off, it is discovered that interest on capital at the rate of 8% per annum, as provided in the partnership agreement, has been omitted to be recorded. So, what has been omitted? Interest on capital. Their capital accounts at the beginning of the year stood as follows: A had a capital of 8 lakh, B had 4 lakh, and C had 3 lakh. Their profit sharing ratio was 2 is to 1 is to 1. Instead of altering the balance sheet, it is decided to pass the necessary adjusting entry at the beginning of the next year, which is what I told you. So we do not alter the balance sheet. Instead, what we do, we pass the next year in the next year and adjusting entry. Okay, at the beginning of that next year. So let us see how we calculate this. So to cut this story short, it is that we have closed the accounts of this partnership firm and we have not given interest on capital to the partners. We have been told the profit sharing ratio and we have been told their capital balance at the beginning of the year. So in this case, let us see how we solve such questions. This is question number 40. So let us understand this by doing some working. Now in my working, I want you to understand that when we solve such questions, we are always going to talk in terms of the partner's capital accounts. We're always going to think we are making a partner's capital account. So let's keep that in mind when we are doing such things. We form something which is called an adjustment table. Since we have three partners in this question, so we will name all of these as their names are given A, B, and C. In this table, we are going to always think in terms of the partner's capital account. Now, what do I mean by that? Let's see. In this question, it is saying we have not given interest on capital. So, when interest on capital has to be given, these partners' capital accounts will be credited. That's what I mean. So, we will write interest on capital and we will write credit. Now, partner A, how much of interest on capital has to be given to him? On 8 lakh rupees, we are going to calculate 8%. On 8 lakh, 8%. So 8 are 64. That makes it 64,000 for the whole year. So this is 64,000. For the second partner, it is 8% on 4 lakh. Third partner, it is 8% on 3 lakh. So 8% on 4 lakh is 32,000 and 8% on 3 lakh is 24,000. Okay. Now, we have just been told the profit sharing ratio, which is 2:1:1. So what we will do is we will add these three amounts. That is 64,000, 32, and 24. Which is 1,20,000. So we will write 1,20,000 divided in what ratio we have been told? We've been told a ratio of 2:1:1. So let's divide it. 1,20,000 into 2 divided by 4, which is 60,000. So we will write 60,000 here. Now here we will write debit. We will put this with a bracket just because this is the opposite of it. And as I said, we are going to talk in terms of the partner's capital account. So when you are taking back something from the partner, it is as if you're debiting their capital account. So we will write debit and we will put a minus bracket around these amounts. For the second partner, it will be, I suppose it's 30,000. So you can work it out. It will come out to be 30. And the third one also, it is 30. Now what we do is we calculate our net effect. And to calculate our net effect, we will see which of these amounts are greater. So see it vertically. So it's like 64,000 in plus and 60,000 in minus, which gives you 4,000 in plus. And as we've seen, the positive figures we are writing with credit. So this will be credit. The next one here, it is plus 32,000 and minus 30. So here I'm going to put 2,000 and here it is going to be again in plus. The last one is going to be 6,000 in negative. So I put it with the bracket and I call this debit. Now, looking at this, we have to make a journal entry. So what is our entry? Looking at this, if we are to make our entry, it will be C's capital account debit, that is 6,000, to A's capital 4,000, and to B's capital 2,000. So our answer is C's capital account debit. Amount is 6,000 to A's capital account. Amount is 4,000. and to B's capital account. The amount is 2000. The narration will simply be being error rectified. So let's see if this is the answer. C's capital account, debit 6,000, to A's capital 4,000, and to B's capital 2,000. This is our answer. So this is our answer, but let's understand what is happening at the back of all this. So for that, let's make a P&L appropriation account. Okay, this is our P&L appropriation. This is our debit. This is our credit. And we will just copy this so that we can use it elsewhere as well. Okay. Now, in this question, as I said in the beginning, that we do not have some profit given, but we know we are supposed to distribute interest on the capital. Now, what is our total interest on capital which we are distributing? We saw 64,000, it came up to 32,000 and 24,000. So if we add all these 64, 32, and 24, then we get a total of 1,20,000. So we know we have to give 1,20,000. So let's assume we have it already with us. That is to say, let us assume that we have in our P&L appropriation the opening amount which is coming from our P&L account, that is our net profit. Let us assume this is 2 lakh. Okay. Now what is happening? We are giving interest on capital. So on the debit side, we will write to interest on capital A, B, and C. And as we saw on the top, we calculated this. This was 64,000. This was 30, I think 32. Yeah, 32. And then the next was 24. And 24. This totals up to 1,20,000. Now, we are still left with a difference, which will be our profit transferred to A's capital account, B's capital account, and C's capital account. Now, how much are we transferring? The question says nothing about the ratio. No, it does say something about the ratio. It says the profit sharing ratio is 2:1:1. So if I divide the balancing figure, which is 80,000, in 2:1:1, I'm just doing this working down over here. So for A, it comes out as 80,000 into 2/4. 2 divided by 4, which is 40,000. So here I will write 40,000. For B, it comes out as half of it, so 20,000. For C again, half of it, which was 20,000. Altogether, this totals up to 80, and my total amount comes up as 2 lakh. That's how this account is closed. Now, look at this account. In these, you can see that A is getting 60,000 plus 40,000. B is getting 32,000 plus 20,000. C is getting 24 plus 20,000. So if we write this down, I'm just writing it below here. So A is getting 64 plus 40 makes it 1,04,000. B is getting 32 plus 20, which makes it 52. And C is getting 24 plus 20. 24 plus 20 makes it 44. Now, this is the actual way. This is the correct way. We have solved this question correctly. What have we done? We have taken the profit, and first we have given our interest on capital, which is this, and thereafter we have taken the balance and distributed as a profit. So this is the correct way, and this is how much each of them is supposed to get. But what did we do in the first instance? In the first instance, we had, I'll just solve it and show over here. In our first instance, we had directly been assuming we had a net profit from the P&L account. We had 2 lakh. We had directly distributed this without giving interest on capital. So we had directly written to profit transferred to A's capital account, and that amount was 2 lakh into the amount was 8%, right? Sorry, the profit sharing was 2:1:1. So into 2 upon 4, which came out as 2 lakh into 2 by 4 was 1 lakh. Similarly, for B's capital account, it was just half of it, so that was 50,000. And for C's capital account, it was again half, so it was 50,000. So my total figure was coming out as 2 lakh. On the side also 2 lakh. So what was happening? In this case, A is getting 1 lakh, B is getting 50, and C is also getting 50,000. This is the wrong way, right? This was the wrong way. In the wrong way, A is getting 1 lakh, B is getting 50, and C is getting 50. So if I cut this from here, I take this up and I paste it there. Just beside what was the correct way for us to analyze. Here I can say, looking at these two, in the correct way, A was supposed to get 1 lakh 4, but A is getting 1 lakh. So A is getting 4,000 less. B is getting, looking at these two, B was getting 52,000 correctly, but he has got only 50,000. Therefore, he gets 2,000 less. And C, looking at C, we can say C is wrongly got 50,000, but he should have got correctly 44,000. Therefore, he has got 6,000 more. Now, the point, what I said when we began these questions was that we are going to talk always in terms of the partner's capital account. So if A is getting 4,000 less, then what will we do? We will credit him. If B is getting 2,000 less, we will credit him. And if C is getting 6,000 more, we will debit him. So this is what we have to do. And if we make the journal entry, it comes out to be the same. We will say C's capital account debit by 6,000, A's capital account credit by 4,000, B's capital account credit by 2,000. So this is our answer. This is everything that is going on behind the scene. So do we need to solve such a big way? No, we do not need to solve such a big way. What we need to do is we need to just make this adjustment table. And in this, we are going to first write down the interest on capital. That is to say, we are first giving them the interest on capital, which is 64,000, 32,000, and 24,000. And then what are we doing? We are adding all this and we are dividing that in 2 is to 1 is to 1, which comes out as 1,20,000, and we are debiting it. We are actually taking this back in this ratio, which is 60,000, 30,000, and 30,000. When we do such a thing, we are getting our net effect to be the same as we would get if we did this long way of doing the working note. So this is what is happening behind the scene. And as far as the solution is concerned, we just have to write this adjustment entry. So that is why we start by writing this adjustment entry, or we leave space for this adjustment entry and do our working below that. Okay. Let's try another question. The next question, let's see this one. It says A, B, C, and D are partners sharing profits in the ratio 2 is to 2 is to 1 is to 1. They distributed the profit for the year ending 31st March 23, which was 9 lakh, without providing the following: a salary to A at 15,000 per month and a salary to B and D at 30,000 per quarter to each partner. Give the necessary adjusting journal entry. So again, it's a similar question, but over here we have been told the net profit, unlike in the first question. So what will we do first? Since these have not been given, and also the profit for the year, which was this 9 lakh, was distributed without providing this, first we will take back this profit. So this profit of 9 lakh was distributed in the ratio 2 is to 2 is to 1 is to 1. Therefore, we will first take this back. Now, why is it that we will take it back? I'll explain it in a while. First, we will solve it in the shorter way, the actual way like we should do. So leave some space in your working note. You will make an adjustment table. Now here we have 4 partners. So we will write A, B, C, and D. The first thing to do is to take back the wrong profits distributed. So 9 lakh was distributed in what ratio? 2 is to 2 is to 1 is to 1. Since we are taking it back, again, we are thinking in terms of the partner's capital account, so we will debit this. So 9 lakh and 2 is to 2 is to 1 is to 1. Into 2 divided by 6, which is 3 lakh. So I will write 3 lakh here. Again, 3 lakh. 1 makes it half of that. So 150 and 150. Since it's a debit, so I'll put a minus sign. Now, we have taken this back. Now let's give things which we are supposed to. So we are giving a salary to A of 15,000 per month. So A's salary. When you give something, you credit the capital account. So it is saying 15,000 per month. So for the year, it's going to be 15 into 12, which is 180. Let's see. B and D at 30,000 per quarter to each partner. So B and D at per quarter 30,000, and there are 4 quarters. So they'll get a total of 30 into 4, which is 120. C doesn't get, D gets 120. Now what is going to happen? Okay. So we had first taken out the wrong profits, then we gave the salary. Now we are supposed to give the correct profits. For that, let us make the P&L adjustment account, appropriation account, I mean, and let's do it so that we are understanding it in the correct way. For now, we are just making it. After some time, we'll stop making that also. I'll show you how to solve things. So P&L appropriation account. Here, as I said, we are told how much is the profit. So here I'm going to write by P&L account. This is my net profit and it is given as 9 lakh. Now I've taken it back, so that means it's come back into my account. Now, what else do I have to write here? I have to write what I'm giving. So I'm giving a salary. So to salary, who all are getting it? A, B, and D. So A, B, and D. Amount we have already calculated. So I'm just writing the figure 180, 120, and 120. What is that total? 180 plus 20 makes it 2 lakh, 3 lakh, and 4 lakh 20,000. I suppose this is 4 lakh 20,000 now. So 9 lakh 180 plus 240, 420, correct. So 9 lakh minus 420 gives us 480. So here we are going to write to profit transferred to, which is known as a divisible profit. So we are actually calculating a correct divisible profit. And what is our correct divisible profit? It is the difference of them, which is 4,80,000. So I'm going to write 4,80,000 here. And I'm going to divide this between A, B, C, and D. What is the ratio that I'm going to divide it in? Is the same as it is given to me, 2 to 1, 1. So for A, it is going to be 4,80,000 into 2 divided by 6, which is 1,60,000. Again 1,60,000. 2 is to 2 is to 1 is to 1. So 80 and 80. So this totals up to 48, right? That's the total of this account. So 480 plus 420 makes it 9 lakh. And 9 lakh. All right. Now, what we have to do is just see how much have they got. So if we look at this, we can see A has got 180 plus. In fact, before this, just let's write it over here. So what is our divisible profit? Our correct divisible profit, as we saw, it was 480, right? Yeah, 480. Correct profit 480 in 2 is to 2 is to 1 is to 1. We are crediting it. We are giving this profit. So the amounts we saw were 160, 160, 80, and 80. So 160, 160, 80, and 80. Now let's take out our net effect. So our net effect is 160 plus 180 minus 3 lakh, which is 40,000. It's coming in positive. So I will credit this. The second one, 160 plus 120, minus 3 lakh, which is minus 20. So this will be debit. The next one, 150 minus 80, this comes out as 70. Again in minus, this will be debit. And the last, 120 plus 80 makes it 2. 2 minus 150 is 50. This will be credit. So let's see what comes out as a journal entry. We have to write it. So it will be B's capital account debit, 20,000, C's capital account debit, 70,000, to A's capital account, 40,000, and to B's capital account, 50,000. Let's see if our answer is correct. Yes, BC 2070, BC 2070, and AD 4050. AD 4050. So that is what we have to write in the main answer. Thus, B's capital account debit 20, C's capital account debit 70, to A's capital account 40, and to D's capital account That makes it 50, I guess. Yeah, 50. Again, narration has been error rectified. Okay. Now, how did we come across all this was by making this PNL appropriation account, and which helped us to solve this. So, if we go and we make this in the wrong way, just in order to understand this quickly, let's see what went wrong. So, we had a PNL appropriation account, a debit, a credit. On the credit side, I had buy PNL. Amount was 9 lakh. I did not give some salary, so I directly divided this. So I was writing to profit transferred to A, and how much I was transferring to A? It was 9 lakh into 2 upon 6, which was coming out as 3 lakh. Just as we wrote it in the adjustment table. So 3 lakh, B again 9 lakh into 2 upon 6, which was 3 lakh. C was getting 9 lakh into 1 upon 6, which is 150. And D was also 9 lakh into 1 upon 6, which was 150. So this totaled up and came to 9 lakh. And our account closed 9 lakh. So if you look at this wrongly, let's see. So the wrong way, A got 3 lakh, B got 3 lakh, C got 150, and D also got 150. Let's take this, cut it and take it up, and let's compare. So what is happening? Let's put it on the right side. This is our wrong way. And in a right way, I can in fact take this on the left side. I'll be able to compare it easily on the left side. Okay. So in the wrong way, A has got 3 lakh, but in the right way, A has got how much? In the right way, A has got 180 plus 160, which is 340. Similarly, B, in the right way, B has got 120 plus 160. So 160 plus 120 makes it 280. C, C has got 80 and D has got 120 plus 80, which makes it 2 lakh. So what has happened here? A has got in the wrong way 3 lakh and in the right way he should get 340. So A's capital account should be debited by 40. Let's look at our answer. Sorry, A's capital account should be credited because you're giving him more. So this one is correct. Then again, B's capital account, right way he should get 280. In the wrong way he's got 30. So he 3 lakh. So in the wrong way he's got 20,000 extra. So we have to take back from him. So B's capital account will be debited. That's what is written here by 20,000. Let's look at C. C has got correctly 80,000, but in the wrong way, he's got 150. That is to say, he's got 70,000 extra. So again, we have to take back from C. So C's capital account will be debited by 70,000. And let's look at D. D has got correctly 2 lakh, but wrongly he's got 150. So therefore, if I have to give him 2 lakh, I have to credit him by 50,000. So D's capital account will be credited by 50,000. So this is a workaround. If you look at it through the longer way by actually making the accounts, then you will understand this in a logical sense as to why we are solving it this way. But otherwise, if you understand the first method, there is nothing like. So let's go to another question. Now let's look at let's look at question 44. It's talking about drawings as well. So let's look at this. It says A, B, C, and D are partners sharing profits and losses in 2 is to 2 is to 3 is to 3. After the accounts of the year had been closed, it was found that interest on drawings at 6% per annum has not been taken into consideration. Okay, so simple in the sense that you have the profit sharing ratio given. After the accounts were closed, you found that the interest on drawings at 6% per annum was not given. The drawings are told to you as 20,000, 24, and 32, along with 44,000. We have to pass the necessary adjusting entry. So we just have to pass that entry. So let's think. Again, we have not been told the profit for the year. Correct? We have not been told. We have just been told something about interest on drawings. So this is solved like we solved the first question, which was 40. 40, I guess, right? Yeah, 40. So let's look at this question, what we will do now. Leave some space, write your working note. In this, make your adjustment table. Four partners, A, B, C, and D. Same as before, we will think about interest on drawings now. Now, when you have to take interest on drawings from the partners, this is going to be debited in the capital account. So that's what we are going to do. So we are going to debit. So let's write debit. Now from A, how much are we going to take? We are told the drawings for A were 20,000. So these are the total drawings in the year. It's not being told as to when it is done. So as we have studied interest on drawings, we write the total drawings, which is 20,000, into the rate, which is 6 upon 100, into the average period. Now, what is our average period? Whenever it has not been given, what do we assume? That the drawings are done at the middle of every month. So the first drawings would be done on 15th of April. That is to say, we have 11.5 months left. Time left after first drawings is 11.5. The time left after the last drawings and the last drawings being 15th of March, it will be 0.5. So this whole thing divided by 2 and this whole will be divided by 12. So let's see what this comes out as. This is for A. 20,000 into 6 into this 12 by 2, which is 6. So into 6 again. Sorry. Into 6 into 6. Divide the whole thing by 1200, which is 600. That is for A. So for A, it is 600. For B, now let's calculate for B. I'll just work it out on the top and I'll delete it after some time. So for B, it is, my total drawings are 24,000. So 24,000 again, I have to do 24,000 into the rate, which is 6 upon 100, into average period, which we saw was 6 upon 12. So let's multiply this now. 24,000 into 36 divided by 1200, which is 720. I'm just directly writing it here. 720 minus. Then the next is 32,000 and the last is 44,000. So for C, 32,000 into 6 upon 100 into 6 upon 12. And for D, as we saw, it was, I guess, 44. So 44 into 6 upon 100 into 6 upon 12. So let's see what this comes out, and this comes out as 32,000 into 36 divided by 1200, 960. So 960, and the last 44,000 into 36 divided by 1200, 1320. Now let's add all this. Okay, just like we did it earlier. So we are going to add all this. And we are going to divide this in 2 to 3, 3, that ratio. So what is our total? 600 plus 720 plus 960 plus 1320, which is 3600. So over here, I have to write 3600 divided in 2 is to 2 is to 3 is to 3. And here I will credit. So 3600 into 2 divided by 10, 720. The next is 3600 to 2 is to 2, right? So 720 again. Then I will get 3600 into 3 divided by 10, which is 1080. And again 1080. Now I will take out my net effect. So what is my net effect? 720 minus 600 is 120. This is a positive thing. This is 0. 1080 minus 960 is 120. And I'll just write this again. It is 1320. 1320 minus 1080. It's 240. And this is in minus. So this is going to be credit. Since it's positive, this is credit and this is debit. Thus, my journal entry becomes D's capital account debit 240 to A to C. Let's rub this out. So D's capital account, in case it was to be mentioned current account, we would mention it. So D's capital account debit 240 to A's capital account 120 and to C's capital account 120. Narration is being error rectified. As I said earlier, if we go behind the scene and we try to solve this by making this account, we will understand as to why we have done this. For being sure, just look at your answer now and you can verify it. It is B 40 to A 120 and to C 120. Okay, let's look at the next one. It says A and B are partners sharing profits in 2:1. During the year ended 31st March, A's drawings were 50,000 per month, drawn at the beginning of every month. B's drawings were 25,000 per month, drawn at the end of every month. After the preparation of final accounts, it was discovered that interest on A's drawings at 12% per annum was not taken into consideration. Give the adjusting entry on 1st April 23. That is at the beginning of the next year. Okay, so again, it's talking about drawings. It's talking about the interest on drawings, which was not considered. So we are going to take, in fact, take this interest on drawings. So solution 45. We'll do it a little quickly now. So interest on drawings. This will be debit because I'm taking it back. How much am I taking back? So from A and B, A's drawings were 50,000 per month, drawn at the beginning of every month. So let's do our working and calculating it. So for A, Let's write interest on drawings of A. This will be 50,000 per month. 50,000 into 12. This is my total drawings into the rate. Rate is given as 12% per annum. So 12 upon 100 into the average period. Average period is calculated by assuming it is done at the beginning of every month. So time left after the first drawings is 12 months plus time left after the last drawings is 1 month divided by 2. This whole thing divided by 12. So let's see what we get. 50,000 into 12. Can in fact cut this out from here. And let's do the multiplication. So 50,000 into 12 into 2 plus 1, 13 by 2 makes it 6.5. Into, 6.5 divided by 100. That is 39,000. Then interest on drawings for B. His drawings are how much? These drawings are 25,000 per month drawn at the end of every month. So 25,000 into 12 is my total drawings into the rate, which is 12 upon 100 into the average period drawn at the end of every month. That makes it the time left after the first drawings is 11 months because it is end of April. And time left after the last is 0 divided by 2 with the whole thing divided by 12. This comes out as 25,000 into 12 into 11 divided by 2 is 5.5 into another 12 into 5.5 divided by 1200. That is 16,500. Okay, so I put 39 and 16,500 minus. Now add these two, 39 and 16,500. 55,500. So I will take that amount, 50,000, 55,500 in the ratio was 2:1. Since I'm giving this, so I will credit it this time. So 55,500 into 2 divided by 3, which is 37,000. And the side, 37,000. This is twice, right? So reduce it by 2, reduce it by half. That makes it 18,500. So here it will be 18,500. Now let's take our net effect. So here I'm left with 2,000, but since it's negative, so it'll be debit. And here it is 2,000 again, but it is credit. So my entry becomes A to B amount is 2,000. So A is capital account. We can check it also. Oh, we made a mistake somewhere. Let us see what went wrong. It says 12% per annum. Yes. After the preparation of final accounts, it was discovered that interest on A's drawings at 12% per annum was not taken into consideration. Give the necessary adjustment entry on 1st April. Okay, so we are saying, uh, let me just see 1 second. Okay, it's we just mistook it. Over here is saying after the preparation of the final accounts, it was discovered only that interest on A's drawings at 12% per annum was not taken into consideration. So we don't have to do for B. That's what went wrong. Okay, so interest on drawings, debit 39,000. A's drawings was not taken, no? So let's forget about B. In this case, let's assume this is not there. Okay, I'm just rubbing it out. I'll just otherwise cut it and put it on the other side. Now let's write for B. So B, let's assume it is here. Let's forget about that. And B is not to get. Okay. So we have a total of 39,000 over here. 39, which now we have to divide in 2 is to 1. So 39,002 is to 1. Let's see. 39,000 into 2 divided by 3, which is 26,000. So here it should be 26,000. This also will go wrong. So we will see. Let's see. So here it is 26,000 and here it becomes 13, right? 26 and 13 is 39, right? Now what's the net effect here? 39 and 26. The difference is 13,000. Amount is with a negative. So this will be debit. And this is again 13,000. And this is with a positive, which will be credit. So my entry, I can also delete this, which is written below. This was, uh, okay, one second. This was not required. For A, it was not for B. So that we can delete. And also what we wrote on the right side. So that happens at times. You may learn from your mistakes also while you are solving. So what is our entry? We see A's capital account debit 13 to B's capital account. So A's capital account debit 13 to B's capital account 13. Narration is being error rectified. All right. So this is done as well. Next one, let's see which one we should do. Hmm. Let's try 48A. It says on 1st April 22, capitals of A and B were 4 lakh and 2 lakh respectively. They divided profits in the capital ratio. Profits for the year ended 31st March 23 were 3 lakh, which have been duly distributed among the partners. But the following transactions were not passed through the books. So we have not passed interest on capitals, interest on drawings, commission to B, and A's salary of 50,000. You're required to pass a journal entry on the 10th of April, which will not affect the P&L account of the firm and at the same time rectify the errors. All right. It's asking us to pass a rectifying entry, a single journal entry on the 10th of the next month, in the next year, in fact. So solution 48A. We have two partners, A and B. So it says we have divided profits in their capital ratio. What is the capital ratio? 4 is to 2. So profit sharing ratio is taken as 4 is to 2. That is 2 is to 1. 2 is to 1 is the profit sharing ratio. So since this is given, we will take it back. So what was the profit that we have given? 3 lakh. The divided profits in the capital ratio. Profits for the year were 3 lakh, which have been duly distributed among the partners. But the following transactions were not passed through the books. Okay. So when we have distributed it, we will take it back. So we are going to write wrong profits 3 lakh. The reason over here is because we have given away this profit without considering all those appropriations. So we will first take back that profit. So 3 lakh wrong profits taken back. Wrong profits of 3 lakh taken back in 2:1. Now, when you take back profits, think again of your capital account. So capital account will be debited. So I will write debit. 3 lakh in 2:1 means, I suppose, 2 lakh and 1 lakh. Okay. Now you will start giving all your appropriations. Interest on capital at 12% per annum. So 12% on 4 lakh, which is 48,000, and 12% on 2 lakh is 24,000. So interest on capital, credit 48,000 and 24,000. This will be credited. So it will be with a plus sign. Next is interest on drawings. And the drawings, A 12,000 and B 10,000. Have we been told the percentage? No. So this is directly given as the interest on the drawings. A is 12 and B is 10. So when you talk about interest on drawings, this will be a debit item. So minus amounts will be 12 and 10. After that, commission due to B, 20,000 on a special transaction. So we are giving commission to B. Again, this will be a credit item. So this will be for B, which is 20,000. A is to be paid a salary of 50,000. Salary. This is for A. So again, credit amount is 50,000. Okay, so these are our appropriations. Now, let's make that account in order to calculate our correct profit, our correct divisible profits. So P&L appropriation. Our total profit was 3 lakh. So here we are going to write profit 3 lakh. Our interest on drawings is 12 plus 10, which is 22. So interest on drawings, this is 22. Interest on capitals, we just found out 48 plus 24. So that is 72. So interest on capital 72. Salary and commission. So we had a salary of 50, commission of 20. Okay, so all is done. Now let's get our balancing figure. 322, 322, profit. This is for A and this is for B. So how much for A, how much for B? 322 mm, minus 72 plus 50 minus 20, which is 180. So 180 in 2 is to 1 into 2 divided by 3, which is 120 and 60. So let's write this down. This is what we have to write here. Correct profit, divisible profit is 180. Correct profit 180 divided in 2 is to 1. That means credited, and we saw it was 120 and 60. Now what is our net? So vertically we have to see. So 120 plus 50 plus 48 minus 212, which is 6,000. This will be of the plus, so that means a credit, and the other one will be 24,000 plus 20,000 plus 60,000. And minus 110, which is minus 6. That is debit. So my entry becomes B's capital account debit to A's capital account. Amount is 6,000. Let's see. B's capital to A's capital amount is 6,000. Narration being error rectified. Okay. So this is what this question was about. Let's look at another. Next is fine. Let's look at 49. ABC are partners sharing profits in the ratio 2 is to 2 is to 1. The fixed capitals were 40, 250, and 1 lakh, respectively. Net profit for the year ending 31st March 23 amounted to 2 lakh 20, which was distributed without providing for the following: salary to B 5,000 per month, and to C 10,000 per quarter. Okay, so we have three partners, ratios 2 is to 2 is to 1. The fixed capitals of 4, 250, and 1. Net profit for the year ending 31st March was 220. Now, this was distributed without giving this. So, since it is distributed, first we will take it back. So, first let's do that. Three partners, A, B, and C. This is our adjustment table. In this, first we are going to take back. So, wrong distribution of profit. The profit is 220. Wrong distribution of profit 220 in 2:2:1. We're going to take it back. In 2:2:1, and we're going to take it back. That means we're going to debit. So 220 into 2, 2, 4, and 1, 5. So 2 divided by 5, which is 88,000. So here I'm going to put 88 in minus. The next is again 88, and then it will be 44 and 44. After that, now we are going to distribute this. So salary to B is 5,000 per month and to C is 10,000 per quarter. So salary, we credit. Salary to B is 5,000 per month. So 5,000 per month makes it 12 5s are 60. And to C is 10,000 per quarter. And there are 4 quarters, so 40,000. Then interest on capital at 6% per annum. So interest on capital is taken on the fixed capitals. Okay. That is on 4 lakh. So 6% on 4 lakh, 24,000. So interest on capital, again credit. This will be 6 4s are 24. 6% on 250. So on 25, 6 are, that is 15,000. Then 6% on 1 lakh is 6,000. After this, commission to the manager at 10% on the net profit after charging such commission. Now we have to think, do we give this commission to the manager within this? No, so we do not give this. So what is the commission given to the manager? 10% on the net profit after charging such commission. So we will solve this in the working note. Manager's commission is 10% of the net profit, that is on 220 into 10 upon 110, which comes out as 11 2s are 22, right? So 20,000. So this comes out as 20,000. Now, if we make this P&L appropriation account, we know that this manager's commission will not come here. Therefore, the profit that we have written here, this will be after we subtract that manager's commission. So I would have written by P&L account, and the profit which I am writing here is going to be 220 minus 20, because this 20 would have come where as a amount which we are subtracting from our P&L account. So this is basically coming from there. This would have been shown in a P&L account. It is a charge against profit. So here I would eventually write 2 lakh. Now what am I left with? Let's see. What have I given as appropriations? A salary, which is 60 and 40, and interest on capital also. So here I will write 2 salary, 60 and 40 makes it 1 lakh. And 2 interest on capital, what is the total of this? 24 plus 15 plus 6. That is 45,000. So it's 45, yeah. Now what am I left with? 2 lakh minus 1 lakh 45, which is 50,000. So here my divisible profit, two partners, right? A and B, is 55,000. Sorry, ABC. And how much will I transfer? The ratio given is 2 to 1. So 55,000 into 2 divided by 5. That makes it 22,000. 22,000 and 11,000. This, if you total, it comes out as 55. And my total figure will be 2 lakh. 2 lakh. So now I just have to take these amounts into that adjustment table. A gets 22, B 22, and C 11. So I would write correct profit. Amount is 55,000 in 2 is to 2 is to 1. That means it is credited, which is 22, 22, and 11. Now let's take out the final answer. So my final answer, looking at this vertically, is going to be 88 minus 24 minus 22. Which is 42, but it will be with a minus sign. 42, which means debit. This one would be 88 minus 60 minus 15 minus 22, which is minus 9, but it will be plus 9 because I took the negative earlier itself. So this will be credit, and my last figure will be 44. 44 minus 46 minus 11, which is a plus 13. And this will be plus or minus. This will be a plus, so credit. Now, what is happening? You're saying this is not matching. So let's see what we will do now. We simply have to write it as it is. So we will write it as A's capital account debit, 2 B's and 2 C's, 42, 9, and 13. So let's write it. A's capital account debit 42 to B's capital account 9 and 2, C's capital account, 13. Now 13 plus 9 is 13, 22. So 22, and we have a balancing figure of 20,000. So any guesses what is this balancing figure going to be for? This is going to be for your manager's commission. So to outstanding managers, not manager, partner's commission, in fact. So we can call this partner's commission, right? It was a partner. Commission, oh, it was a manager. I'm sorry again. It was a manager who was getting this commission. So we will write manager's commission. So to outstanding manager's commission amount is 20,000. Narration will be being error rectified. Okay. So this is this question, A, B, C. It says is, oh, one mistake we have made. It should be current account because we are talking about them following the fixed capital method. You have to be careful on this whenever you are solving such questions in where you are told partners are having a fixed capital of this much or whatever. So A is current account, B is current account, and C is current account. Okay. So the entry is A's current account debit to B's current account, to C's current account, and to manager's commission outstanding. The amounts are 42, 9, 13, and 20. So that's the same. Let's try the 51st question. It says ABC are partners in a firm. On 1st of April, their capital stood at 5 lakh, 2 lakh 50, and 2 lakh 50 respectively. As per the provisions of the partnership deed, C was entitled to a salary of 10,000 per month. Partners were entitled to interest on capital, and profits are to be shared at the ratio of capitals. The net profit for the year was divided equally without providing for the above items. Pass an adjustment entry to rectify the above error. So what has gone wrong here? We have on 1st of April their capitals, and we are told that we have distributed it equally without providing any of these above items. So it's a similar question. Let's try it still. The three partners. So A, B, and C. So we were told 3,30,000 is divided equally without providing any of these above items. So here we write gross profits distributed taken back. So 330 equally. That is 1 is to 1 is to 1 debit. Amount is 11 or 1,10,000. So we've taken back our wrong profits. Now let's give things which we are supposed to. So C is entitled for a salary of 10,000 per month. Salary, credit. C. That means 10,000 per month makes it 120 in the year. This is given, so it's a plus item. Partners were entitled to interest on capital at 5% per annum. Partners are to get interest on the capital at 5%. So 5% on 5 lakh. 10% is 50,000. So 5% is 25,000. So interest on capital, again a credit item. This is 25,000. So B it is on 250. 10% is 25,000. So 5% will be 12,500. For C it is again 12,500. Then, as per the provisions of the partnership deed, these things are given, and the profits are to be shared in the ratio of the capitals. Now, profits are to be shared in the ratio of the capital. So, what's the actual profit? For this, we will make a P&L appropriation. Three lakh 30. Salary, I will give 1 lakh 20. So here I'm writing two salary. Two interest on capital. Amount is 50,000. I'm left with 330 minus 170, which is 160. So what is my profit? We have three partners, right? A, B, C. So 160 this comes out as 330, 330 A, B, C. So let's divide it. 160 in the ratio of the capitals. It says are to be shared in the ratio of the capitals, which is 5 is to no, it is 50 is to 25 is to 25, which is 50 is to 25 is to 25, which is 10 is to 5 is to 5, which is 2 is to 1 is to 1. So 1,60,000 into 2 divided by 4, 80,000. So here we have 80, 40, plus, oh, here I will write correct profit 1,60,000 in 2:1:1 credit because I'm giving it, and the amounts are going to be 80, 40, and 40. My net effect or my final answer 80 plus 25, 1,05,000 minus 1,10,000. That is -5, which is a debit. This will be 52,500. So 1,10,000 minus 52,500, which is 57,500. This will be a negative amount. So debit. The last one will be 120 plus 40, and 12,500 makes it 52,500. Minus 110, which is 62,500. This will be a minus or plus. It will be a plus. So credit. So A, B to C. Amount is 557,500 and 62,500. A, B to C. Amount is 557,500 and 62,500. That's our answer. So A is which count? It's not talking about any fixed method. So A is capital account, debit 5,000. B is capital account, debit 57,500. To C is capital account. I think I did the wrong amount. Yeah, so 57,500 should be for B and 62,500 for C. This should be 57. Narration being error rectified. So that's it. Let's do maybe that seems fine. Okay, let's do a question where we're talking about a difference in the interest on capital. Let's try question 54. 54. It says A, R, and S were partners in a firm, sharing profits and losses in the ratio 2:1. They're fixed capitals. Okay, keep in mind fixed capitals are here. So we will have to talk about current account. Well, 1,60,000 and 40,000 respectively. For the year ended 31st March 23, interest on capital was credited to them at 9% per annum instead of 7% per annum. Okay, so three partners. This is the ratio. Fixed capitals were given also. And we have been told that they have been given interest at the rate of 9% instead of 7%. So when you get interest at 9% instead of 7%, that means you're getting extra interest. So you have A, R, and S as partners. And you're given extra interest, in fact. So interest on capital, since I've given extra, I'm going to take it back. So I'm going to debit. How much have I given extra? I've given them 9 instead of 7. That means I've given 2% extra. So therefore, 2% of interest on capital, I'm going to take back. So 2% on 1 lakh is 2,000. 2% on 60,000 is 6 twos are 12. So 1,200. 2% on 40,000 is 800. Now, if I take this back, I have to total it up. So I'm going to write 2,000 plus 1,200 plus 800 makes it 4,000 in what is their ratio? 2 to 1. 2, 1. And I'm going to credit. So 4,002 2 divided by 5 makes it 1,600. So yeah, I'm going to write 1,600. Yeah, I'm going to write 1,600. And 1 makes it 800. So 32 and 8 makes it a total of 4. So my final effect is going to be 2,000 minus 1,600, which is 400 be in minus. So this will be debit. This will be 1,200 and 1,600 makes it 400. This will be plus, and this will be nothing. So my entry becomes R's, no, A's current account debit to R's current account. Let's check it. A's current account to R's current account amount is 400. Again, being error rectified. Okay, let's see any more. Five 56. We'll try 56. Okay. Because after the accounts of a partnership have been drawn up and the books closed off, it was discovered that for the years ended 31st March 23 and 24, interest has been credited to the partners upon their capitals at 5% per annum. No provision for interest is made in the partnership agreement. The amounts involved are for the 2 years. These are the interests which are credited to each of these partners. You're required to put through adjusting entry as on 1st April 24 if the profits were shared as follows. In 23 in a particular ratio and in 24 in another particular ratio. So what is being told to us is interest on capital for 2 years has been provided to us. And we've been told that there was no provision for the interest in the partnership agreement. Okay. So what do we have to do in such a case? Just make the adjustment table and we'll work it out. So let's try it. Illustration 56. A, B, and C. So, first of all, you've been given the interest, which is not supposed to be given. So, what will you do? You will take it back. So, we will write this interest on capital. This is for 23. Since we're taking it back, so I'm writing debit. Amounts will be in negative 42, 24, 13, 20. So 4200, 2400, and 1320. Now, again, for the next year also, we will take it back. We have not been told the total amount. So we can add that later on also. So for the second year first, let's take it back. So it's 4320, 2520. Since we're taking it back, put a minus sign for 4320, 2520, and 1320. Now, since we have to pass this at the end of the second year, so we can calculate everything together because it is saying pass the adjustment entry on 1st April 24. And we are told the profit sharing ratio of the 2 years. So what we'll do in the first year is, first we have taken it back. So we will add these amounts 4200, 2400, and 1320. 42, 24, and 1320. So 4200 plus 2400 plus 1320, which makes it as 7920. So first we will write 7920 in which ratio we will take it on the first year. So in 23, it is 2 is to 2 is to 1. 2 is to 2 is to 1. Since we are doing credit in this case, so this will be a plus sign. So 7920, 7920 into 2 divided by 5, which is 3168. Next, again 3168, and then 3168 divided by, because it is half, so 1584. Okay. Now let's take the second amount. So 4320 plus 2520 plus 1320. Which is 8160. So here I will write 8160 in, which is our ratio. In the second year, it is 3 is to 4 is to 3. Again, credit. So this is 3. So 8160 into 3 divided by 10, which is 2448. 8160 into 4 divided by 10, 3264. And the last 8160 into 3 divided by 10, 2448. So now let's see what is our net effect. 2448 plus 3168 minus 4320 minus 4200 minus 2904. So 2904. This is a minus, so this will be debit. Next is 3264 plus 3168 minus 2520 minus 2400, which is 1512. This is coming plus, so it will be credit. Next is 2448 plus 1584 minus 1320 minus 1320, which is 1392. This will also be in plus. So what is my final answer? A is capital or current? Let's see. I don't think it is talking about any fixed method. Yeah, so this is the normal account. So A is capital account, debit 2904 to B to C 1512 and 1392. Correct? So that's our answer. So we will write our answer. A is capital account, debit 2904 to B's capital account to C's capital account. Let's see the amounts. It is 1512 and 1392. 1512, 1392. Narration is being error rectified. So this is it, dear children. And we'll stop here. We'll continue this again and we'll finish this topic in our next class. Till then, do like, do subscribe, do share this with one another so that each of you is benefited. And I wish you all the best.